Hello, everyone. This is Brian Dewars with Uncommon Wealth Partners, bringing you your market update and Bitcoin briefing. It is mid-October, and wow, a lot has happened since our last video. The markets were in free fall last week for 2 days, and of course, Philip and I were at a conference. It seems like every time we travel, the market gets hit. So we will be giving you more heads up on our next work trip. With that, markets today, S&P 500 as of the close of today, October 16th, 2018, S&P up 5.09, NASDAQ 10.74, Dow Jones 4.36. Gold has reversed substantially. We'll get into that today, down only 5.94, and Bitcoin as of close today, negative 55.1. So let's jump into it. I'm going to do a different video today. I want to show you guys kind of what I look at. Things that come across my radar and where I'm getting information. And some of these charts are just really cool stuff that you really probably won't see, through normal channels. And I just kind of wanted to go behind the curtain. A lot of people always ask me, what do I look at? What are people that I follow, podcasts that I listen to, that type of thing. And so I wanted to kind of show you some of that stuff that crosses my desk and what I find important and what we're trying to do with that information. So this first chart is from a gentleman I follow specifically on gold. He has been very accurate in regards to gold for the last, I followed him now for 15 years, was a former professional Wall Street trader, now kind of just manages his own money and runs a subscription newsletter. This is a chart from him. This is a long-term chart on gold. I say long-term loosely because gold has been in existence for 10,000 years, and this only goes back 10 years. So loosely 10 years is a long-term chart. But what I think is important in this chart is from a technical perspective, he calls it kind of a massive bull continuation, head and shoulders pattern. And you kind of see this is an inverse head and shoulders. So you have the head down, left shoulder, right shoulder. And so kind of like I've talked about in past videos, you want to see like a bowl created almost, and we're starting to see that in gold. And so gold reversed quite a bit in the last few days with the volatility in the market. And so his belief is that gold is going to go on a multi-year uptrend, completing the other half of this bowl. And so anyways, it's interesting to watch. And I think the technical analysis is in line with our past videos. And he kind of just shows you with some of these horizontal support and resistance lines, some of the key areas moving forward based on historical prices in gold. And so there's some other things he has inside this chart. He has RSI, volume, and then some sort of indicator up here kind of bouncing around. So anyways, I like this guy. He's been very accurate with gold, and I thought this chart was kind of cool. So this is the Smart Money Flow Index. This is a chart. It's kind of like a sentiment or a trend type chart. It's based on professional traders and kind of where their money flows are at. And so you see that they've kind of come down quite a bit, which would suggest with how bullish things have been that they think, prices are inflated and that major markets, NASDAQ, Dow, S&P are going to pull back. And so this chart was highlighting the fact that we haven't seen these types of levels on the Smart Money Index since 2008, 2009. And so could be a sign that that more downside risk in the markets is coming. And so I thought this was interesting. Here's a chart. It's kind of tough to see, but this is basically the S&P 500. And this is back to 2016, kind of when Trump got elected, and that instability there, and then just this kind of massive stair step we've been on up here. And so he's highlighting the support and resistance lines, this kind of uptrend channel that we've been on. And if the markets break this line, it could be, a much, much larger decline. So those levels have held up. The market was up today. This chart was from a few days ago. Kind of, I think, a good visual of just kind of that upward stair step trend that we've been on for several years, and just how powerful and long-term these trends can be, and how important it is to just stay invested for the long term. So with that, here's another one. This is showing the S&P Home Builders ETF. You can see it peaked at about 47, and it's down to about 37. Last video talked about real estate and kind of the price instability we're seeing in the major markets, pricing of lumber, that type of thing coming down, and the home builders can be a leading indicator, just because so much of our economy is tied to housing. So again, showing pretty substantial decline there, almost 20, probably 20%, give or take 25%. So not something to shake a stick at by any means. So something to continue to watch. This one I thought was super interesting. Charles Schwab Client Cash Index. Obviously, Charles Schwab has gotten a lot bigger over the last couple decades, and they have substantial amount of assets on their books. And so, this dark blue line just showing the S&P 500 reaching all-time highs, and the Schwab Client Cash position reaching 30-year basically lows. And so definitely something to keep in mind here as the market continues to be volatile up in these areas near all-time highs, and that was interesting as well. S&P's peak PEG ratio. So PEG is a price to earnings divided by growth ratio, kind of very popular with private equity, hedge funds, that type of stuff. Kind of hard to see, but basically it's reaching all-time highs, or has reached all-time highs in this price to earnings growth ratio, and could be a signal that a top is in for the market. So something else to keep an eye on. And what they're showing in here is QE1, QE2, QE3, Japan QE, and the ECB QE, which is Europe Central Bank, showing that maybe these valuations are being fueled by the cheap money through central banks. So that was kind of the part of the chart that's hard to see. This is another one that kind of goes in line with the Charles Schwab chart, FINRA margin debt and the S&P 500 adjusted for to present day. And so basically in the red, you've got our margin debt. Margin is, think of it kind of like, you basically are borrowing against your equity portfolio. And so nothing that we would ever recommend or can recommend to clients, but you can leverage against your brokerage account as an asset. Similar to like a home, just the volatility is a lot greater. The interest rates aren't fixed. It's kind of like a credit card against your stock portfolio. And so what this chart is showing is that margin debt is at an all-time high. And that can be, as you see kind of the dot-com boom and bust, that margin debt came crashing down along with the S&P 500. Here we had the financial bubble, margin debt peaked 500 billion, and then the subsequent crash. On these gray bars are recessions, and so showing the convergence of margin debt coming down and the S&P 500 coming down. But just like mortgages and like we had in the financial crisis, where people could get mortgages with no money down and they're giving away all this free money and people are qualifying without income. If you've watched the movie The Big Short, very great movie on the financial crisis. Very similarly, those price increases were fueled by cheap free money. And so what this chart could be alluding to, a little bit different because not a lot of people, relative to people that own homes, are using margin debt to purchase stocks. But it is out there, and 500, 600, 700 billion dollars isn't chump change. So basically showing that margin debt is hitting a new all-time high, and it's trading in this same upward trend that we just highlighted with the S&P 500. And if that margin debt comes down, it can also be very correlated to the S&P 500 coming down. So very interesting chart. The other one I think that's kind of interesting is pleasure boats, aircraft, and other recreational vehicles. Kind of talked about this last video in terms of like lumber, home builders, housing, that type of thing is very leading indicator. And so you're seeing a pullback in housing, lumber, home builders. Typically, it's the canary in the coal mine to the rest of the broader market. And with that, another leading indicator is these kind of pleasure things, boats, yacht, toys, if you will. And so when the economy is super strong, people are buying toys. And when the economy is really weak, people stop buying toys. And so this is showing kind of a year-over-year growth comparison, and you can kind of see 2017 hit a record high for those types of sales, and in 2018 we've actually gone negative in terms of growth rates here in the last couple months. And so could be definitely a canary in the coal mine for broader market instability. We're seeing that overseas and could be coming to our shores. And so kind of another interesting chart. And then finally, I wanted to give the converse. This is from a really good guy on Twitter that I follow, professional trader, decades of experience. And he actually still thinks in the short term, this is a shorter term chart, only going back about a year, that he thinks the Dow Jones, based on this index, has put in a low and should be bouncing up back towards 28,000. So closed today about 25,700 and change, so somewhere in there. So anyways, yeah, about another $2,300, $2,400 of upside, which is about, just shy of 10%. So anyways, I don't want to be totally bearish on this video. Trying to just show you that there's a lot of data, supporting lower prices in the stock market. We're trying to be mindful of that. We're up a lot over the last 10 years out of the March 2009 lows, and trying to be mindful that this uptrend could continue, and that there are people that think this uptrend is not done yet. And so trying to manage that and trying to manage money, and all of that is part of people's plan. And so again, if you're concerned about where the markets are at or where your portfolio is positioned, all those different things, we definitely want to talk. And I hope this data has helped you or is informative in some way. And again, we're here for you if you want to talk and make sense of all this as it relates to your personal plan. But again, just, a lot of good info out there that we're seeing, a lot of important data points, and trying to make sense of it all for you. So hope that helps. We'll have kind of go back to more of the original format of the videos at the end of October for Halloween, and can't wait to catch up with you all soon. Thanks for watching. Bye-bye.
The material in this video has no regard to the specific investment objectives, financial situations, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell a security or any other related financial instruments. Nor should any of the content be taken as investment advice. Any of the opinions expressed in this video are subject to change without notice, and Uncommon Wealth Partners LLC is not under any obligation to update or keep current the information contained herein. Uncommon Wealth Partners LLC and its respected officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. Uncommon Wealth Partners does not accept any liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.